All right, what up, guys? Welcome back to the vlog. It's pretty dope that you're sticking with this. Fucking proud of you. All right, cool. So we'll jump right into it. Same book, right? A Beginner's Guide to Day Trading Online by Tony Turner, and we're on chapter 11 now. We're getting there. We're almost done. All right, cool. So the last time we did this, we went over a quiz at the end. And so if you watch the previous video and you're interested in finding the answers to those questions, these are the answers. Number one, the answer is 1, 2. Well, actually, backtrack. Let me read the question. So if you weren't here for the last video, you can learn something from that. All right, so number 1, what are the first 4 Fibonacci numbers? And the answer to that is 1, 2, 3, and 5. Number 2, give one reason traders look to these numbers for guidance. And it states because stocks tend to move in increments of these numbers. For instance, a stock may move up 5 days and down 3, or up 3 days and down 1 or 2. Number 3, strong stocks in an uptrend tend to bounce off their blank or blank moving averages. And the answer is their 20 and 50 moving average. Number 4, define a gap opening, which I didn't mention in the last video. I'm not really like pointing out all of the things that are like super specific to stock versus crypto. But I think like if you're kind of like doing your own due diligence, I think that you'll notice, I guess, terminology and things that come up with stock versus crypto. There are some differences there, so just kind of be aware of that. I haven't always pointed that out, but and some things I may not even like necessarily know that there's a difference between the two. Not a difference, but it's possible there's things that, well, there's a lot of shit I don't know, right? We're beginning traders, right? All right, so just take it like that. All right, number 5, when your target stock meets your entry criteria but gaps open, how do you play it? Number 5, play a gap opening by waiting until the stock fills all or part of it, then reverses back to the opening direction and confirms that reversal with price. If the stock doesn't fill the gap within the first hour of trading, odds increase that it will continue in the direction of the gap. So yeah, that whole gap thing doesn't happen with crypto because the crypto market never closes, right? So it happens in stock because, or with the stock market because the stock market does close. And there's like a pre and after market. And so there's things that happen when the market closes. That's probably my wings. One moment. Okay, I'm back. Not gonna lie. Wings were fire. Almost said fuck this book, but we're staying consistent. All right, let me open this back up. Excuse the vulgarity. All right, where were we? Number 5, I may have already said this. I apologize if so. When your target stock meets your entry criteria but gaps open, how do you play it? Play a gap opening by waiting until the stock fills. I remember reading this, so we already did this. My apologies. We're going to move on to number 6. Why do you study your stock's previous intraday pullback range? Do you remember this one? I do. We study the amplitude of our stock's pullbacks over the days prior to the entry day to aid our stop order placement. All right, number 7, when you day trade, what is the maximum loss you accept? An acceptable loss for the day trade, for a day trade, is 40 to 50 cents per share. Unless it's a highly volatile, high price stock, then the acceptable loss may jump to 80 to 90 cents. Number 8, true or false? If your stock acts irritated, you're justified in moving your stop order down to a safer place. I hope you remember the answer to this. It's false. Don't do that shit. Number 9, true or false? Odds of morning day trades increase on the long side when the target stock consolidates into the prior day's close and closes near the day's high. True or false? And the answer for that is true. Number 10, what's the best overall guideline for setting stops? And it is set your stop orders far enough away from your entry price to give the trade time and space to evolve, and close enough to prevent damaging down draws or drawdowns. Number 11, before you enter a trade, what do you check first on your stock's level 2 screen? The answer is the width of the spread between the inside bid and the ask. Hopefully you remember what parameters you're looking for. Number 13, hold on. So, hold on. The full answer to that was the ideal spread between the bid and the ask is 3 cents or less. The narrower the spread, the quicker you can exit the trade if it goes against you the minute you enter. All right. Next, which listed stocks, if possible, trade toward blank? With listed stocks, if possible, trade toward blank. All right. The answer is size. Trade toward size. And the last one, number 14, at the end of this chapter, we pictured a Tuesday morning scene. Please imagine the same scene again. This time, however, a total of 3 negative conditions suddenly crop up. Using everything you have learned so far, what might they be? Hint, any one of the 3 causes you to reconsider the trade. All 3 together cause you to sit on your hands. And the answer is, any of the following conditions should make you reconsider placing a long trade. More than one warns of low probability of success. Number 1, low volume on the breakout. Number 2, you see the 200 MA sloping above the stock's current price. Number 3, the tick takes a sudden dive. Number 4, the trend rockets through 1.0 and keeps going. Number 5, the E-mini S&P futures drop like a rock. Number 6, the stock approaches strong resistance from higher time frames. All right, cool. And this is going to be the center point. And it's called Release the Past. These are actually like the center points that she writes. This is one of my favorite parts about the book because she gets kind of like, it veers off from just talking about trading, and she really goes into more like behavior and the psychology of people. So it's kind of cool to read these. Anyway, center point, release the past. People are always blaming circumstances for what they are. I do not believe in circumstances. The people who get on in this world are the people who get up and look for the circumstances they want. And if they cannot find them, they make them. George Bernard Shaw. Do you know anyone who has fully left the past behind him or her? Few of us achieve that freedom. For all of us, at some level, the past is not really the past. Even when painful circumstances occurred weeks, months, or years ago at a deep emotional level, we still hold on to them. We attempt to bury them, but they still affect our lives. The energy we use in regret and resentments burns at the unconscious level, so we don't realize why we are nagged by feelings of negativity or unhappiness. Yet, unless we somehow release the negative energy, the past affects our present day experiences and shapes our future. We cannot hold on to negative energy from the past in the form of grudges, resentments, and fears, and at the same time move towards our highest potential. Why? Because negative feelings block the flow of positive energy into our lives. The best way to release the past is to forgive. Forgive ourselves and those people and situations that hurt us. Just as our bodies heal physical bruises, our inner self wants to heal emotional injuries. We heal by releasing those injuries. We release by forgiving. To forgive, we face the matter and we own it. We acknowledge that the negative energy that we've been carrying around no longer serves us. We choose to leave the situation behind, and in doing so, we forgive. Forgiveness is a gift to ourselves. It releases us from the past, fills our lives with positive emotion, and frees us up to shape abundant, successful tomorrows. Fucking beautiful. I love it. All right, cool. So chapter 11, scalps, shorts, or the quick and the dead. I don't have anything to say really. All right, here we go. One successful scalper says, scalping is the closest you'll get to being a fighter pilot and flying into battle. Your rivals are professionals who capitalize on your errors if you interrupt their actions incorrectly. You must lock onto your opponent's movement and accurately assess their intentions. Are they playing head games, or is what you see real? Once you decide, you either engage or stand on the sidelines and live to fight another day. If you choose erroneously, your best move is to retreat to safety and to re-strategize for the next battle. Hold on, backtrack. If you choose erroneously, your best move is to retreat to safety and re-strategize for the next battle. His analogy is highly accurate. When you scalp, you go head to head with market professionals who are as unforgiving as any opponent you'll ever encounter. So what is scalping? As mentioned before, the trading style known as scalping, taking a trade with the profit objective of grabbing a fraction of a point within seconds to minutes, has greatly diminished in popularity since decimalization, replaced fractions in the market quote system. A few scalpers remain though, and if you want to try this type of trading, you must be 1. Able to focus with razor sharp intensity for long periods of time, 2. Able to execute orders rapidly, and 3. Able to maintain a nimble mindset at all times. Successful scalpers have zero tolerance for ignoring stops or hoping for a stock's recovery. Facts. Reality check. When you play this game, many of your foes are institutional traders who likely have more experience, more money, and more quote information than you do. Don't ask why it's so difficult to turn a page. All right. If you decide to scalp, these are overall tactics. Trade large share size, at least 500 to 1,000 shares per trade. Make multiple trades per day, and your risk reward is 1 to 2. Scalpers aren't known for their long sentences or their patience. You rarely see them studying charts in time frames larger than 5 minutes. If you don't trade large share size, profits will be too meager and commissions will soak up any gains. Making less than a dozen or so trades a day won't net you enough gains to make it worth your while. Remember, many of your trades may be losers. The risk-reward ratio assumes more than 50% of your trades are winners. So you'll have to generate a high percentage of winners to stay afloat. My strategy is to use 2 to 5 minute charts to target scalping setups, then execute our orders on a level 2 order entry system. I do not recommend scalping with an online discount broker. It can take too many clicks to enter an order. Once the order is entered, you have little control over it. When you scalp, speed is your primary weapon. The level 2 order entry screens furnished by direct access brokers offer price transparency, quick execution, and act as an additional guide to managing the trade. Basic scalping tactics. When you're scalping, mental discipline dictates whether you make or lose money. As just mentioned, greed, fear, hope, or the need to be right have no room in a scalper's cool, calculating mindset. Greed especially tempts traders to stay in scalping positions too long, then greed laughs and slaps traders with a loss. How do I know? When I first started trading, this was one of my biggest challenges. Once in a scalp, I clung to the trade like white on rice. Call it greed or dignify it by calling it optimism. Whatever the name, I learned that holding on to the trade for an extra 5-cent profit nearly always boomeranged into similar profit or smaller profit or a loss. In other words, if you're in the midst of a successful scalp and hear yourself making oinking noises, it's time to cash in on your profits. When you scalp, time and risk reward ratios compress. Since your profit objective is small, you keep your risk even smaller. Scalping plays usually last from seconds to minutes. Profit objective, 15 to 75 cents per share. To make money scalping, you need a high percentage of winning trades. When you're swing trading or even day trading, one multi-point gain can erase 2 or 3 losing trades. Not so with scalping. You make 25 cents, you lose 12 cents, you lose another 13 cents. You're not even. You're down on the day. I read that weird. All right, remember, commissions add up when you're only clearing 15 to 25 cents. Price behavior at whole and half numbers. Certain numbers create natural support and resistance, such as whole and half numbers. Stocks moving up tend to stall at whole numbers, or they creep a few cents over, then slice back through them. Example, let's agree that Igloo ice cream represents typical intraday stock movement. It shoots up to $25.98, then hesitates just below the whole number. If it's having an extremely strong day, it will rise through 26 to 26.05, then dive maybe to 25.90. That's why you consider taking profits, part or all, just below or on the whole number or on it. That's kind of interesting. Whole numbers also act as support unless the price just jettisoned through it, and in the example described, when Igloo pulls back, it will slow or halt at $25. If it slips below $25 to $24.90 on a puny day, it may slide lower fast. Investors and traders know that stocks tend to bounce off whole numbers. Therefore, a multitude of stop orders perch just below whole numbers. When a stock slips through a whole number and hits 90 cents or the 75-cent mark, the triggered stop order increases supply. Supply drives price lower. Half points don't deliver quite as much support and resistance, but they can give slow movement. If simple software rises to $25.47, watch for a stall and pull back at $25.50. When it rises to $25.85 or $25.95 and then pulls back, it will probably stall at $25.55 or just above the half mark. Okay, I need chapstick. This is no longer a game. Nowhere in fucking sight. All right, perfect. We'll keep going. Okay. Scalping technique, early entries. Today's scalper can't wait for breakouts. The brevity of the trade dictates early bird action. Capitalizing on initial momentum, scalpers take initial positions while the price still sidesteps in consolidated zones. More shares may be added when breakouts or breakdowns solidify, or traders may pull off half of the position trade when the breakout or breakdown follows through, again capitalizing on momentum. The price depends on the individual trader. Whatever the style, the objective is to seize a quick profit and leave. Receivers on professional football teams must have good hands, and as scalpers, you need to have fast hands. If you can, on the long side, buy on the bid, then offer out on the ask while the stock is still running. Level 2, review and scalping strategies. Here are level 2 strategies to add to your scalping skill set. These tactics may help you scalp and trade intraday with more precision. Scalp stocks with a 1 to 2 penny spread. This is a must. When you scalp, you risk no more than 5 to 10 cent loss. Therefore, if you have to buy on the offer, you want no more than a 2-cent spread between you and a possible instant loss. The tighter the spread, the smaller the risk. After you note the spread between the inside bid and ask, note your stock's level 2 screen for depth of the participants. How many specialists, market makers, and ECNs line up at the inside bid to buy your stock if you want to sell in a hurry? The longer the line of the participants at the bid price, sell side for specialists, MMs, or ECNs, the more depth it has. Do the same procedure in reverse. Participants at the ask if you're selling short. When a breakdown occurs in an active stock, thousands of traders hit the bid simultaneously. For example, say Igloo ice cream starts melting. You and I, along with thousands of other traders, issue a sell order. Those orders eat through bids in nanoseconds. Specialists or market makers on the level below the inside bid will likely evaporate. Orders posted by ECNs will have left long before. That leaves the level below that, which will also dissolve, gulp. Market maker strategy is to let falling stocks drop like a stone. They wait until you're sweating and will take a rock bottom price just to get rid of it. Then when the selling pressure lifts, market makers will dole it out to new buyers at a much higher price. Enter only with good depth on the bid when you're scalping long and good depth at the ask when you're selling short. A good rule: only enter scalps on the long side when specialists or market makers on the inside bid number 4 or more. Stocks showing 1 or 2 market makers on the inside bid or ask are too thin. When you're scalping, thin price levels equal fat losses if the trade goes against you. Figure 11-1 shows a level 2 screen of the volatile research in motion Ltd, abbreviated as RIMM. Although depth of the bid and offer are on a roller coaster, I totally read that wrong, backtrack. Although depth of bid and offer on roller coaster stocks like RIM are short-lived, for rapid fire scalps and momentum plays, they offer added information. If your stock is climbing a little faster but not too fast, and if there's enough room in the spread, you can go high bid. That means if the spread allows you to split the bid and ask by entering a limit buy order, a penny higher than the current inside bid. I feel like I also read that wrong. 1 second. If your stock is climbing a little faster, but not too fast, and if there's enough room in the spread, you can go high bid. That means if the spread allows you, split the bid and ask by entering a limit buy order a penny higher than the current inside bid. Okay. In a fast market, when your target stock is trading on the offer and running up too fast to hit the bid, you lift the offer. So this is figure 11-1. This is a level 2 screen. This is definitely an older book, but this definitely still looks relevant to today. So let me show you guys this. Okay. Figure 11-1. This level 2 screen of Research in Motion Limited, or RIM, shows the manufacture of wireless communication devices with plenty of depth on the bid and less on the ask. This translates into more buyers than sellers, at least for the moment. If you look down to the last price trades, you'll see traders are lifting the offer at $71.35. If you're planning to buy a RIM right now, you'll have to pay the inside ask, $71.35. As well, the ask column shows only two participants at that price level, ARCAX and PSE. Shares may be lifted so fast that you'll have to pay the next level up, $71.36. Once and assuming momentum propels the stock higher, you offer out quickly, grabbing as much of the points as you can before the sellers take over and the pullback begins. Before you buy, check out your target stock personality just as you do for day trades. What is its average pullback range? What is its average run-up range? Measure recent upswings. That helps you anticipate how far it might run once you're in. Although 500 to 1,000 shares are the minimum size, you'll want to scalp when you're learning. Practice with small lot sizes. A neophyte pilot who's used to flying a Cessna asks for trouble if he climbs into the cockpit of an F-16. Similarly, a novice trader used to trading small lots and extended time frames who suddenly pumps up his share size to 2,000 may end up as the scalpee instead of the scalper. Please go slowly and hone your skills carefully. Cool. All right, so we're like 20 minutes in, and actually I think we're beyond that. All right, cool. So we will go ahead and stop there for today. And I hope you guys will join me again tomorrow, and we will continue reading chapter 11. I think this is going to be broken down into 3 sessions as opposed to 2, like I typically do it. So I'm going to try to make this video a little bit shorter. Hopefully it makes it a little bit easier to kind of write your notes and kind of, you know, hold your attention to the book and that whole thing, and not kind of like bombard you with a whole bunch of information all at one time. Anyway, thank you for joining. It's been lit as fuck, and I will see you guys tomorrow. Peace.
When he walk through the door, be like, looky nigga, no hair, no draws on his pussy, nooker. Butterflies off the chart with you.